Welcome to TradeTheMBI.com. This is John. This report is for the 5th of October. Look at that beautiful incline all the way back from the dips down here. And just following the ABM nicely. It's a little overdone at this particular point. We've got a little bit of softening right there. Short-term buyers kind of fading on this since they've had such a great gain from where we began seeing them take active role, which was right here as we dipped down to the ABM green on a full reset here of the DOC from the short-term, mid-term buyer range. And it's just been a nice run. So we made new highs for the shakeout, which is critical, but you can see that we've passed the plus 15. We're headed to the 25. That's a clear warning sign that things have gone a little too far, and that's fine. Starting to see a little up. Look at this. The shorts are so low on this. I mean, we don't even have anything on this screen going back through August. I think if I shrink it, you're going to be hard pressed to find a reading down here below the negative 7.5 for the cyan. That's just incredible to see that kind of capitulation from shorts. However, that does make it more difficult to see significant climb. That's just one of the trade-offs. Here we can see the NASDAQ still unable to break past peak move from over here, so completely lagging in general. We might as well take a look at the Dow while we're at it. We can look at the ETF. Just basically moving a decimal place over. Gives it a nice fractional. But you can see the last setup here was also a return to the 50% Fibonacci and then continue to climb from there. And that's typically what we see a lot with Dow setups and that, where you'll get the run, your 50% return, everyone buys that back, and then boom, go. Now, of course, it depends on where you want to measure your 50% from, but following our setup here, that's exactly how it worked out. And again, also, pretty much mimicking the S&P, just a slightly behind. You can see a little bit weaker overall and also well into overbought territory. But look at that with the cyan. I mean, that's insane. It's minus 13.5. That's incredible. It's basically people have given up fighting the Fed, and a smart move because they have unlimited resources and they can do what they're going to do. Now that's an indication that, perhaps might be a little fanciful to think that the Fed is involved in, but the easy money and nowhere else to put your capital to earn a return sort of forces a direction of capital flow, no question about it. Euro still maintaining elevated levels there, which certainly bolsters the S&P and Dow as well. As international corporations do well under higher values, outside of the U.S. dollar. And then continued dollar devaluation would certainly bolster the readings even better. TLT stuck in its little down phase right here. It's starting to get a little oversold. We're not stuck in the malaise. You see with the orange caught between the cyan and the red. As long as it stays in the middle range there, you wouldn't expect anything but more of the same, slightly lower. And oil surplus is fading a little bit more. We just had the positive extremes right there that were right off this ABM level, so it's pretty much where we're at. It's easy now because below the green, obviously, it's still short from that signal right there, and that just becomes your turnaround point. And gold holding on right about this level. We were waiting for this oversold characteristic has developed. The question now is, we're going to see an orange dip that's going to give clear buy indication that this particular is still below the red line, which is an important aspect to note, that still got some inherent weakness built into it. From an intraday, this was a very small range. We've had several of these small day ranges, and all we pretty much had was a dip to the 50%, consolidation, made new highs, returned to the 50%, and didn't quite make it to the new highs, but just repeating that pattern. And I know this is not what you would draw as from a traditional Fibonacci, but this is based off of the fluctuating roll of ours, and it's pretty consistent. We get to the oversolds right at the 50% point. Likewise, right about here, and the orange dipped right at that point, and we popped up from it. So it's always critical to see coming to these, and this is something I've always pointed out, basic Fibonacci levels really don't mean a whole lot unless you get an indication that there is some reason that someone's going to step in and buy that level. Otherwise, it's just a line that they're crossing. It doesn't mean anything. All that's good and dandy. All we can do is trade what is in the narrow range. You just have to take the signals that come in and just wait. It's sometimes boring, but there's not much else you can do. I mean, this has been along for us since the 2485 when we had that retrace intraday to it, and it's been nothing but straight up from that point. So not a whole lot to do, but it's okay. Just take it and keep plugging away. As always, though, I will be on the Skype chat. Trade well. Talk to you later.